Simon Derrick, Chief Currency Strategist at Bank of New York. Simon, can you start by telling us borrowing costs rising on Italian and Spanish debt, investor flight to safe haven currencies, and the euro tumbling? What's put the fear of God into the markets?
I really do think it's about an uncertainty of the bailout for Greece. Over the course of the last several weeks, we've had a number of different plans coming up, but the problem has been that none of those plans have actually met the requirements of all the different participants. Most notably, the ECB, Germany, and the ratings agencies have all had very different needs and very different views about the right way forward. Over the course of the last 48 hours, one of the key stories that's come up has been the abandonment of the French bank's plan for the bailout for Greece, and instead the idea that perhaps we could see something that is a combination of a bond swap, which is the idea that Germany has been pushing for, and a reduction in the overall debt that Greece has, the idea that maybe there could be a buyback of some of that debt, maybe up to 10% at market levels. The problem with both those ideas is actually there is already fairly strong objections. Germany has a fairly fundamental objection to bond buybacks. The ECB isn't particularly keen on the idea of the debt exchange, and I'm pretty certain that the ratings agencies aren't happy about both. So at the moment, we face the very real prospect that in 2 or 3 months' time, the next round of funding for the Greeks from the IMF and the EU, there simply won't be a bailout plan in place. And if that's true, there is a fairly good chance that they won't get the next tranche of cash. There is a secondary issue, and it's a very important secondary issue, which is that if there is a technical default on Greece, there is a very good chance the ratings agencies will move Ireland and Portugal into junk territory, which means investors can't hold that debt, and that also causes issues further down the line. Unsurprisingly, investors are looking at this and the uncertainty it causes, and they've got increasingly less interest in actually holding euros, and as a result of that, they've also got more broadly got less interest in holding risk assets, and therefore we're seeing this move back into the funding currencies, the dollar and the yen, and also into the ultimate safe haven currency, obviously the Swiss franc.
Sure. So we sort Greece out and all this goes away. I mean, will the euro continue its decline that we've seen recently? You think this will sort of sort itself out if we find a quick resolution for Greece?
If there were a quick resolution for Greece, then I feel fairly certain that there would be a reasonable rebound for the euro. But there is a secondary issue, and it's quite an important secondary issue, and it's this, that over the course of the last 12 months, one of the main forces driving the euro higher, despite the euro crisis, has been the recycling of reserves by countries like China. The stronger the reserve flows into those countries, the stronger the diversification at the margins, the higher the euro's got. At the moment, there is a concern that maybe China is going to have a slowdown in the second half of this year. And particularly coming at the same time that QE2 has disappeared in the United States, there is a belief that perhaps less money is going to be flowing into those markets. Some evidence of that today already from the latest reserve numbers. If that's true, that we have this slowdown, this more risk-averse market, and there's less money flowing into China and the other nations, then it's equally true that there'll be less recycling at the margins. And that could be important to removing some of the support for the euro.
Okay, but where do you see the euro at, let's say, year end? I mean, are you revising your forecast now? Are you kind of, bearish on this?
We've been actually bearish for quite a while now. Our belief really from about February this year was that this summer would see a turning point for the euro, and that we would see a more risk-averse, more soft patch for growth taking place in this second half of the year. So we've pretty well been bearish. The only question is, do we need to revise down our targets even further from where they currently are? My belief, we'll probably end up with targets somewhere in the low 130s for euro dollar by year end.
Okay. And just looking, let's say we don't sort Greece out and the contagion issue in Europe continues. Spain and Italy need funding. Would the EU and the ECB accept 5 countries in the Eurozone that need funding? And is this could it survive?
It's such a hypothetical issue that really, with regard to Spain and Italy at the moment, I'm really not that certain. Where I do think quite specifically the issue does come is what happens for Portugal and Ireland. I do think quite specifically we have to be concerned about that. The pace with which those spreads are widening out now, they're already, if they had to go to the market today, they'd have to be paying the same as Greece had been paying at the start of April. And therefore, there is quite a reasonable chance that we could start to see the markets become concerned that there could be a second bailout for those countries. If the market doesn't believe that in 2012 and 2013 they'll be able to go back, then clearly bailout 2 will be on the cards. If that's the case, then clearly people will start to go one stage further and say, how much genuinely can the Eurozone afford? In that circumstance, I do think actually the Euro comes under even more pressure.
Okay. Do you think the ECB are regretting raising rates last week?
It's the eternal debate. I mean, you could ask exactly the same question about 2008. Did they regret raising rates just before everything collapsed? Yes, I do think that maybe there will be a degree of debate, particularly given the fact there is a suggestion that with commodity prices easing, that perhaps some of the inflation pressures will come off. But frankly, we're at such low levels of monetary policy that it is fairly debatable whether it would make that much of an issue. I do know, though, that perhaps some of the guys in the more peripheral nations do have a few questions about it.
We've had the ECOFIN meetings over the last couple of days. This seemed to scare investors more than it reassured them. I mean, we've only seen this coming over the last couple of days, right, with the Italy and Spain. So why hasn't it allayed fears?
Because quite simply because they didn't actually come out with a plan. I mean, all we seem to get is, yes, we're going to have another meeting, and then today's another great example of that. We've had some soothing words. We've had, yes, nothing is off the table in terms of discussing a plan, but no plan. And no reaction to the stories that have come out over the last 48 hours of this combination plan that was being discussed. And moreover, we've got yet another meeting at the end of the week. The fact that so many meetings are taking place and that there is no consensus emerging about what the right way forward is, I think leaves investors feeling deeply scared.
Okay. How many times do you see the ECB raising rates again this year?
I have to be honest, because I do think there's going to be a slowdown in the remainder of this year. I actually think at most one more time, and personally I think actually we may have reached the end of the cycle temporarily.
Okay. Just looking sort of at the euro now, again, what keeps you awake at night? What are the risks there? What is really worrying you as a currency strategist?
What really worries me is the very fact that we don't have a plan for what's going to happen to Greece, and I do think that is a major concern. And the fact that we're going to be talking about a debt restructuring. That's really, we've not talked about this within a developed country for 50, 60 years, and certainly nothing within Europe within living memory of that nature. So yes, it's this sheer uncertainty of what happens next and how the different parties react. What happens to the ECB, for example, if we call a debt default, all the Greek debt that sits on the ECB's books? How does Germany react to this if there is a default in Southern Europe? How do the Northern Europeans react? So that if they believe that further bailouts are going to take place, do they become increasingly isolated themselves? Is that uncertainty? And it's an uncertainty we didn't have before the euro. If these had been the days of the ERM, everybody would have left or revalued or devalued the currencies by now, and that would have taken some of the pressure off. But without that safety valve, it seems to me that we're building up a far more extreme situation within the European nations than has been experienced by anybody in these markets in our lifetime.
And Olli Rehn's just come out, I think, very recently, I mean, we're talking today, and saying that there's been an agreement on the role of private investors in solving the Greek debt issue. Do you believe him?
Well, let's put it this way. If there's been agreements on private investors, and given how sensitive the issue is, I'd really like to see some details. And until such points, I'll reserve judgment.
Okay. Just looking at safe haven currencies, the Swiss franc, the dollar, do you think this is a good time to be buying those, staying away from the euro, selling the euro? And also, what's your view on sort of Nordic currencies as a safe haven?
I'm very cautious about the idea of the Nordics as a safe haven. It does make sense, and I can understand why. But of course, they've been popular currencies for the last year or so now, and therefore I think there's quite a lot in that trade. Historically, and again, this is maybe me just showing my age, I have distinct memories of when the money comes out of places like Norway, it tends to come out very rapidly. It's a very narrow door. So I wouldn't use those currencies as a safe haven. I understand exactly why people would use the Swiss franc, and frankly, I think they will continue to do so. And because I do have concerns about growth in the second half of the year, I think investors will continue to seek those safe haven currencies. Perhaps the one I'd be cautious about at this point would be the yen. Now, I do think that naturally there is going to be a further flow into the yen simply because it has been a funding currency in the recent past for a number of risk-on trades. And therefore, when there is no unwind, naturally that money goes back. And I do think there'll be further upward pressure on it. But we did hear comments coming out from the finance minister today that made it absolutely clear that they're considering the possibility of intervention again. They used all the code words. It might not be here, but I suspect that if we got much below the recent lows, let's say we got below 79 in a sharp move, then yes, I do think there'd be some intervention. The question mark would be, and this is a critical one for investors, would this be shock and awe again in the way we saw last September? Or would this be an understanding that this was actually simply smoothing the markets? That in the face of these quite dramatic changes in investor sentiment, perhaps that's the most sensible thing to do. My feeling, I think it'd be the latter rather than the former, and therefore it'll be a smooth appreciation. But I think we have to see what they do first before we rush aggressively into the yen.
Okay. Just one final question. What is the view on the European debt crisis from across the Atlantic? Are they more concerned about what's going on in Europe or more concerned about what's going on in the US with the fiscal situation?
I think they're obviously far more aware of the US debt crisis than perhaps we have been until the last few weeks. But pretty well in much everything I hear is investors becoming increasingly concerned about what's happening in the Eurozone. And in fairness, that's a conversation I've been hearing from well over 12 months. Certainly, I was travelling around the United States in early May of last year, and at that point, that was the #1 issue then. I don't really believe that's changed.
Okay. Simon, Derrick, thank you very much.
Thank you.